Exercise 1.24. The information relates to Enid Limited for the financial year ending 28 February 2025. Required 1.24.1. Complete the note for cash generated from operations for the year ending 28 February 2025. 1.24.2. Complete the statement of cash flows for the year ending 28 February 2025. Some of the figures have already been filled in. Where notes are not required, show calculations. 1.24.3. Calculate the following for 2025. Round calculation to 1 decimal point. The percentage net profit after tax on revenue, the debt equity ratio, and the percentage return on average equity. Information A. Extract from the statement of comprehensive income for the year ending 28 February 2025. They give us the revenue, depreciation, interest expense, income tax, and net profit after tax amounts. Information B. Figures obtained from the statement of financial positions and notes for both years, the fixed assets at carrying amounts, financial assets, which is your fixed deposits, your current assets, your equity, your non-current liabilities, and your current liabilities. C. Share capital. The entity has authorized share capital of 900,000 ordinary shares. 500,000 shares were already in issue on 1 March 2024. On 1 May 2024, a further 160,000 shares were issued. In return, 816,000 Rand was received and deposited in the bank account. On 1 September 2024, 80,000 shares were bought back from an unsatisfied shareholder at 80 cents, higher than the average issue price at that stage. D. Fixed assets. Expansions to land and buildings were completed during the financial year. There was no other movement in fixed assets during the financial year. And E. Dividends. An interim dividend of 79,200 Rand was paid on 30 September 2024. The final dividend was declared on 28 February 2025. 1.24.1. Complete the notes for the cash generated from operations for the year ending 28 February 2025. So first we're going to start with the net profit before tax. According to information A, our net profit after tax is 689,500. The income tax is 295,500. So the net profit before tax will be your 689,500 plus 295,500 to give you 985,000 Rand. Adjustments relating to depreciation is 211,000 Rand, interest expense 136,000. So if you add those two amounts together, you get 347,000. This was given. Now operating profit before changes in working capital will then be 985,000 plus 347,000. And this will give you 1,332,000 Rand. Cash implications due to the change in working capital. We are going to look at the change in inventory, debtors, and creditors. If we go to inventory from information B, in 2024 it was 534,000. In 2025 it was 498,000 Rand. So we had a decrease in inventory. 534,000 minus 498,000 gives you 36,000 out of brackets, as it's an inflow of cash. For debtors, we go to 2024, it was 566,000 Rand. And in 2025, it was 582,000 Rand. So we are going to have an increase in debtors. 582,000 minus 566,000 gives you 16,000 in brackets, as it is an outflow of cash. For creditors, trade creditors in 2024 was 721,000, and our trade creditors in 2025 was 663,000. So we are going to have a decrease in creditors. 721,000 minus 663,000 gives you an amount in brackets of 58,000 Rand, because it's an outflow of cash. So our net change in working capital will then be 38,000 in brackets. So operating profit before changes in working capital, 1,332,000 minus our changes in working capital of 38,000 gives me my cash generated from operations as 1,294,000 Rand. 1.24.2, complete the statement of cash flows for the year ending 28 February 2025. Some of the figures have already been filled in. So our cash implications from operating activities, we're going to start with the cash generated from operations, and we've just calculated that as 1,294,000. Then we'll have interest paid of 136,000 in brackets, and then we will record income tax paid, and we'll always have a calculation for that. So we'll start with amounts as per income statement. If we go to information A, our income tax is 295,500. Then we add our opening balance of 6,440, and we add our closing balance of 3,540. That then gives us an amount of 305,480, which we will subtract. Then dividends paid. We always go to the shareholders for dividends. At the beginning of the year, we owed 75,000 Rand as dividends to our shareholders. So that will obviously be the first amount that's going to be paid over. And then information E says that an interim dividend of 79,200 Rand was paid. So if we take 75,000 plus 79,200, we then paid over dividends of 154,200 Rand. So our cash implications from operating activities will be 1,294,000 minus the interest paid, minus the income tax paid, minus the dividends paid, to give you an amount of 698,320 Rand. Cash implications from investing activities. We are going to start with our fixed assets purchased. Now remember, for your fixed assets purchase, you start with your opening balance, you minus depreciation, you minus any assets that you sold, in this case there wasn't any, and then you minus your closing balance at the end of the year. So if we do that, it's 3,198,540 minus our 211,000 depreciation, minus our closing balance of 3,937,700 Rand, and then our fixed assets purchased will be negative 950,160. So our cash implications from investing activities will be 950,160 negative. Then you add the 130,000 change in investments to give an amount of 820,160 in brackets. Cash implications from financing activities. We start with our proceeds from issued shares, and it was given as 816,000 Rand. Then we go to our shares bought back. On 1 September 2024, 80,000 shares were bought back from an unsatisfied shareholder at 80 cents higher than the average issue price at that stage. So firstly, we need to calculate the average issue price. So to calculate the average issue price, it's our ordinary share capital divided by the number of issued shares at that date. So if we go back to the question, our ordinary share capital at the beginning of the year is 2,352,000 Rand. And on the date when we issued the shares, we issued 816,000 Rands worth of shares. Then divide by the number of issued shares, we had 500,000 ordinary shares at the beginning of the year, plus the 160,000 that we issued. So we will then have 3,168,000 divided by 660,000 shares to give you R4.80 per share as your average issue price. If we go back to the question, they said on 1 September, 80,000 shares were bought back from an unsatisfied shareholder at 80 cents higher than the average issue price. So the price we bought the shares back is then R4.80 plus 80 cents, which gives us R5.60. So shares bought back would be 80,000 shares at R5.60, and that's going to give us 448,000 in brackets, as it's an outflow of cash. So our cash implications from financing activities will be your proceeds from issued shares minus your shares bought minus your loan repaid, to give you an amount of 168,000. So your net change in cash and cash equivalents will be your cash implications from operating activities minus your cash implications from investing activities and adding your cash implications from financing activities. And that will give you an amount of 46,160. Your cash and cash equivalents at the end of the year was given as 28,860. Then you work backwards to get your cash and cash equivalents on the 1st of March, and that will give you an amount in brackets of 17,300 Rand. 1.24.3, calculate the following for 2025, round calculations to 1 decimal point. The percentage net profit after tax on revenue, so it's going to be your net profit after tax. If we go to information A, it's 689,500 Rand. Divide by your revenue of 5,620,000, and then we times 100 over 1 to get a percentage, and that gives you 12.3%. The debt equity ratio will be your non-current assets to your owner's equity. So it's going to be 1 million to 3,362,100. And if we simplify that, it's 0.3 to 1. Your percentage return on average equity, that'll be your net profit after tax over average owner's equity. So we'll take the previous year and the current year's equity and divide by 2 times 100 over 1. So it's 689,500 divided by half of 2,528,800 plus 3,362,100 times 100 over 1 to give you 23.4%.